Tackle today, the Justice Brothers from Tackle Trading, bringing you all the charts, news, analysis, so you can be informed in your trading decisions in just a few minutes. Tesla comes, they deliver a little shot of adrenaline. Economic data pretty strong as well. Eyes on yield still. We'll break it all down, Matt. When I look at the S&P 500, I see what I call a classic pinch, where you're above one moving average, the 20-day moving average, which has served as support many times in bull runs. But below that 9 EMA, little indecision as we start the week. The start of the week, start of the day.
It started the day. That is correct, and that's what you're seeing it from a technical perspective. But that's what happens when you give up the 9 EMA after a high base. It turns into a little bit of a choppy retracement because the 20 period moving average catches up to it, and then you have that tiny pocket in between the 9 and the 20 where you want to certainly get it resolved. And it would be very easy just to get right back up above the 9, and you're talking right again about that potential breakout against that 586 level in the S&P 500. And so a little bit of shot of volatility yesterday, and quite frankly, not at the cash open, not from an earnings perspective. There was a news report that came out on Apple yesterday during the actual market session that sent the NASDAQ and a lot of the mega cap stocks down fairly aggressively yesterday. For the most part, the rest of the market held fairly firm, but we did see a violation of that 9 EMA and the high base pattern on the S&P 500. And that Apple story was basically that they were going to be delivering about 10 million phones lower over the course of the next, I want to say fourth quarter going into the first quarter of 2025. Now, most of these phones are not of the Pro version. Most of them are not newer phones. Apple's obviously looking at trying to get rid of some of their older phones here. But at the end of the day, we were expecting a little bit of a super cycle, as this was the new Apple Intelligence iPhone with the new features on AI. And that just has not proven out so far. And so that news story did send a little bit of a volatility shock to the market. But what you saw in the overnight action was a recovery off that violation of the 9 EMA. And so you are talking a little bit about that pinch, but it could have got ugly yesterday from a technical perspective. It's good to see the market fight back at the close yesterday, and then on that overnight sessions as well. When you are looking at the rest of the market here, are the Qs here just kind of hovering against that breakout still. Saw the exact same volatility we saw in the spiders. Obviously, it was a Q story. You're still looking at that overhead at 500 saying, okay, we got a major earnings landscape next week. A lot of those mega cap stocks report earnings next week. And so you're probably looking at a little bit of hesitation on the Qs going into a very important earnings backdrop next week. When you're looking at IWM, the volatility yesterday was not necessarily in cyclical areas of the market. It was really more about that NASDAQ and the NASDAQ bringing down other areas of the market. But this retracement on IWM is not a volatility-based retracement. It's pretty standard retracement, quite frankly. Obviously, IWM is a choppy area of the market in general, but a little bit of a cleaning up job IWM is doing right around that 50 period, and obviously got a little bit of a cluster on top of that with the 20 and the 9 on top of that as well. And so when you're looking at the indexes across the board, a good recovery over the course of the last little bit in the market. Could have got ugly yesterday, did not. Now we're fighting back up into that same degree of technical patterns we've been navigating all week long.
Boy, these technical patterns feel like traders, investors, algos are waiting for something. Well, we got no shortage of something. I'm very excited to talk to you on the Trading Justice podcast this weekend about the murderer's row of things coming up in the market.
There's a lot. There's a lot next week.
Like next week, the week after, it's insane. It's insane.
Next week and the week after are two really big weeks for the market.
Like it's pretty insane. And we head into next week, which will be part of the insanity, will be labor market week and GDP and an inflationary data point. And we got a bunch of data this morning, and it continued the trend. Economic data coming above expectations. In fact, it was 4 for 4. Some of them slight beats, some of them noticeable beats like jobless claims. But all 4 economic reports this morning continued that trend of resilient economy. This has been the trend in the market ever since the labor market data a month ago. And that's what's helped propel the dollar, helped propel yields as part of the fuel.
Absolutely. And I wouldn't exactly describe the economic data as robust, right? But at the end of the day, you are absolutely right. We've went through a string of beats, and on the slighter side of the equation, but that string of beats have certainly sent a lot of areas of the market up, 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 i.e. the dollar yields. That has obviously been starting to play a little bit of a role against what the market is doing itself, and obviously the commodity side of the equation. But before we get into those, we got a little bit of stocks to talk about, and there was a major report coming out of Tesla here today. A lot of earnings reports in general, obviously, but Tesla, IBM, Newmont Mining were the three that I wanted to talk about in stocks in the news. In our Tackle Trading Traders Lounge that we do every single day for the pros, we're going to be covering a lot of different earnings reports here today. But for right now, yeah, Tesla was obviously the biggest company to report here today. They came out with a beat against expectation, actually beat by about 10%. Revenue did miss that expectation, but revenue was up 7% year over year. And then when you're looking at Tesla kind of from a segment perspective, net income rose up $2.17 billion. That increased by about 2%. When you're looking at the autonomous growth, Elon Musk projected about 20 to 30% vehicle growth for next year. Tesla is producing about 35,000 autonomous vehicles weekly right now, and they're expecting 20 to 30% growth. That's obviously a very important growth segment for Tesla. Cybertrucks became their third best-selling EV in the United States, and they have sold over 16,000 units so far. They delivered 462,000 vehicles, about a 6% increase year over year, but that was slightly below the forecast. And Tesla doesn't necessarily provide guidance, but Musk certainly talks about it quite a bit in the conference calls. And Tesla expects modest growth in vehicle deliveries next year as well. And one thing about Tesla is every vehicle they are producing from now on, even though their autonomous FSD technology is not ready, every vehicle being produced now on is being produced from an autonomous perspective. And so Tesla had quite a bit to talk about, but at the end of the day, they had a beat against EPS. That beat was better than the average market, and Musk talked a little bit about more positive, I would say, about the future growth aspect of a lot of the segments of Tesla. EVs obviously being a concern right now, but Tesla's holding firm here, holding firm, and obviously gapped up here today against that earnings report as well. We'll take a look at the technicals here in just 1 second. When you're looking at IBM here today, IBM reported 230. They missed the expectations very slightly, just by about 1%. IBM also came in about 1% above the year over year revenue. So they did beat on revenue. They missed on EPS, both very, very slight. On the guidance side of the equation, they also slightly lowered guidance. And so these are all around the edges of where the expectations were. But at the end of the day, I personally take IBM's report as a negative. And then Newmont Mining, a very important company to tackle trading, obviously one of the more important companies to the gold miners. They did gap down here today, and it's really simple to understand Newmont's Mining. Really good revenue handle, extremely good revenue handle, and that's to be understood given the fact where the where gold itself has been and continues to be. But they did miss against expectation. They were expecting 86 cents. They came in at 81. That was a natural gap type situation. And so when you are looking at these three stocks from a technical perspective, you look at Tesla, a little bit of a gap up, but a gap up into some extremely challenging resistance levels right around that 260 to 270 level. And so good gap up, a little bit of a run away from the gap, but does have some extremely challenging conditions when it comes to the overhead from a technical perspective. And I'm not sure that Tesla specifically from this earnings report provided enough momentum, enough to get excited about for it to catch some type of momentum condition. if it isn't for the market itself. And so keep an eye on Tesla, but certainly keep an eye on that overhead resistance level. That is extremely important. And that is a mid-tier resistance level as well. A breakout there would be very interesting on Tesla. So keep an eye on that. When you're talking about IBM here today, a little bit of a miss against expectation and a little bit of a gap down, a little bit meaning 6%. But when you're up from 185 all the way to 237 and your name is IBM in the quarter, I don't think a 6% gap down is that big of a deal against the larger trend that is happening here. Looks like a profit-taking earnings report for investors who have captured quite a bit of gains over the course of the last quarter as IBM starts to become a little bit of that AI growth name with Watson. Watson's a very important part of that AI conversation. And so a little bit of a gap down on IBM to be understood. It was overextended in trend, your late stage trend. You've had a lot of growth in the quarter and you slightly missed on EPS. Nothing really changes on the fundamental side, but investors are going to lock in profit in that environment. And that's what I see happening on IBM. And then on Newmont Mining, you got a gap down and a sell down. And once again, not a sizable miss on EPS, but a miss nonetheless against that EPS handle. And so you gap down on the EPS side of the equation, and then that just continued to run down. That's not too abnormal, I would say, for gold stocks who do like to move with a little bit of volatility, but we would certainly like to see that simmer down here. You don't want to see the continuation of the selling here. And so you're right around the 50-period moving average on Newmont Mining. Let's see if we can get a little bit of a support build, but you do have some really important support right around 52 as well. A little bit of a gap down, but the market cash open was really nasty to Newmont Mining. That selling pressure has not been alleviated as of yet. And that's what we have for stocks in the news here today.
Yeah, gold and silver hanging in there in the face of these yield and dollar charts. Dollar yields not moving a ton today, but they have been. That's been one of the stories. Do we get the break on the dollar eventually? I mean, it's a red candle, which is news in and of itself on the dollar in the last month. But boy, it really would be nice to get these charts just taking a break, Matt. I mean,
I'm with you. I'm with you. I would love to see a little bit of consolidation on the dollar to get a better understanding of what specifically the dollar wants to do, because these V-shaped recoveries cannot be sustained. Can it be sustained all the way back up to resistance? Certainly it can, but they can't be sustained long term. And so, yeah, I would love to see a little bit of consolidation in the dollar to see exactly where the commodity landscape wants to go. Where does the currency landscape want to go? Because it's tough to see that in volatility. And you know, Mark, you're looking at nothing but up, 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 and I still described it as volatility, because volatility is not just down. It's the speed of movement, and we really haven't had any secondary patterns from a 100 test all the way up to a 104. And you might say to people that don't understand currency, they might say, well, that's only a 4% movement. A 4% movement in a currency is sizable. It is a very big movement in comparison to what a stock does at 4%. A stock can move 4% on an intraday move. A currency never does those types of things unless there's something fundamentally changing. And so it's interesting, but yes, I would love to see some consolidation. I will say this, Mark. Currencies go at how the economic reporting system goes. And so the number one reason a currency goes up or down is because the economy goes up or down. There's a direct relationship to the health of an economy and the underlying currency itself. And so you've had a string of beats, and those string of beats have done twofold. One, they have sent yields up and they have sent the dollar up. Both yields and the dollar going up usually caps out price performance in the S&P, which we have seen to a certain extent. You know, it's still bullish. It's still a good trend, but we have seen slowing momentum in that trend.
yeah, but basically, when you look at it, we haven't done anything in the S&P since this dollar dollar move started happening. We're, basically in some version of consolidation about where we're at.
Outside of like 3-4 sessions that were momentum based and got us into the high base, I would agree with that. But Mark, what we haven't seen is down aggressively on the S&P, and what we haven't seen is down aggressively on the commodity side of the equation. And so my point is, today we are finally seeing some slowing momentum in this trend. And it's just one day. One day doesn't make a trend, but we're seeing that in the face of positive economic data. And that's my general point is for the most part, this thing has just been going up, 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 up on those strings of beats. We got strings of beats today, but the dollar didn't go up today. And so is this, are we starting to see the consolidation come in as you start to get into these overhead resistance levels? This momentum did not care about any moving average along the way. It busted through every single one of them. But as you start working up into a little bit more of the standard technical resistance levels, you do have a technical resistance level right around 105, and you certainly have a major one right around 106. And so we'll see if we get a little bit more than that. But sorry for staying on the dollar too long. I had some thoughts there today.
It's a big chart in the market right now.
It's a very important chart. Now, on the other side of the equation, gold holding really firm here, forming up a little bit of a high base. Nothing to be too concerned about. High bases could consolidate for 3 to 4, 5, 6 trading sessions. That's what we're seeing at the top end of the channel on the gold chart. You're looking at silver here. Silver has a little bit of a doji here. To me, you either got to trade down from here to form a flag, or you got to clean that bad boy up and get back up into 35 and start talking about a major resistance breakout at that 35 handle. And so you can't see it on the chart here. You go out to a little bit of time, major resistance at 35 on the silver chart. And so, yeah, you definitely want to see a secondary pattern develop there. On the copper side of the equation, still trying to hold firm against that low base type situation. A lot of support underneath 4.3, but it's trying to hold firm against 4.3 here, Chucky.
Yeah, absolutely. Listen, lots to talk about in the Traders Lounge today. You'll be joined with Coach Greg. It's going to be a fun, great, informative Traders Lounge. You can be part of that lounge each and every day by going to tackletrading.com. Sign up for that 15-day free trial.